Hey guys, how's it going? Seth here. I wanted to take a minute and let you know about a pretty important little piece of knowledge you'll want to know if you're selling vacant land with owner financing. And this really has to do with your tax liability that you have to worry about each year. And before we go any further, I'll just, reiterate like I always do. I'm not a CPA. I'm not an accountant. So just kind of take this as my own personal experience and insight. And definitely double check all this stuff with your accountant before you go any further. But I know in my first year selling owner finance land, like one of the biggest kick in the gut moments I had was when I realized that the IRS was looking at me like I was a dealer, not an investor. And this is one of the nuances that a lot of people don't really think about or even know about until they get into this situation and they realize that the IRS actually differentiates between a real estate investor and a real estate dealer. And the way this is defined, I'm going to include a link to this in case you want to go check it out, but this is from the IRS website. It just says straight out, a dealer in property is a person who regularly sells property in the ordinary course of their trade or business. So for example, if you are a flipper of any kind, which is pretty much exactly what land flippers are, the whole idea here is to buy properties super cheap and sell them for more as quickly as possible. So there's not really any way to escape that. It just is what it is. And the same thing would apply to like a house flipper or anybody who's just constantly churning through properties like this. They're not buy and hold investments where they hold them for the cash flow that kind of get in, get out, and make money and move on. That's what a dealer is in the IRS's eyes. But if you're classified as a dealer and not an investor, one of the big downsides in a seller financing scenario is that you're not taxed based on the income you receive from an installment sale in that 1 year as an investor would be. As a dealer, the taxable income you will eventually make from all of the future payments in that installment sale are due immediately in that first year, not over time as it would be for an investor. Regardless of when you'll be collecting that money, the IRS doesn't care. If they think you're a dealer, you will have to pay that full tax bill for that entire sale price, plus the interest you're going to receive all in that first year. So, this can like sabotage your entire first year, maybe even put you in the red based on how long that term is. So this is like a big setback and kind of a crazy rule in my opinion, but that's just me. I'm not the IRS. I'm sure they have their reasons. But again, for a real estate investor who's classified as a dealer, this is a problem. It's just a huge issue. But the good news is, if you're a land investor buying and selling vacant land that's residential and doesn't have a dwelling on it, there's a little bit of hope for you. So I'd like to point out this little section of the U.S. tax code. It's fairly obscure, and a lot of CPAs are not even aware of this because they never have to deal with it. And there's a ton of tax code that a lot of people don't know about because it only applies to a small subset of people like us land investors. So I'm going to scroll down to the part that's most important here. And basically what this is doing is it's pointing out a very important loophole for land investors. If you scroll down to this section that starts with dealer dispositions and just sort of read each one of these things, eventually you'll get down to this little section here that says timeshares and residential lots. So in typical IRS fashion, they don't make this easy to understand, but if you can decipher a lot of the oddball tax lingo that they use here, basically what they're saying here is that this dealer disposition, which is described right here, and by the way, I'm going to link to all this stuff beneath this video in the description, so be sure to check that out. But this dealer disposition, which basically is the whole problem that causes us to have to pay all these taxes in the first year, there are some situations when this does not apply, and one of those is if the person is dealing with a residential lot. This is basically a really important exception that you should show to your accountant at tax time if they think you're supposed to be paying all this money up front. Just make sure that they see this, point this out, and they'll see pretty clearly that you don't actually have to do that because you're dealing with a vacant residential lot. And on that point, it is important to understand how the IRS defines vacant residential lot. If you check out this page, which just gives a massive definition of what disposition means, one of the things you'll see buried in here is that the term disposition does not include a disposition, which basically just means sale of a property to a domestic corporation in a distribution or transfer described in section 381A. So basically what that's getting at, to the best of my knowledge, is that you should not be selling the property to a corporate entity in the US. I don't know why that's so important, but apparently that will screw everything up if you do that. So just make sure you're not doing that. And then also it's important to make sure that the property remains unimproved land and doesn't change. If you look over here back in the tax code, it says any residential lot, but only if the taxpayer or any related person is not to make any improvements with respect to such lot. So you buy vacant land, you don't improve it at all, and you sell the vacant land. There you go. So that's also very important. And then again, as this implies, it's got to be a residential lot. So don't do this with a industrial lot, a commercial lot, an agricultural lot. Just make sure it's zoned residential. So again, I'm just giving you my layperson's overview. I'm not a CPA, I'm not an accountant, but I do know in my first year, my accountant gave me some really bad news about how much I'd have to pay in taxes for my seller finance properties. And as soon as I showed them this, they were like, oh, okay, never mind. Thanks for that. So if you have an accountant who doesn't know any better, and many of them don't because they don't have a reason to look into this stuff on a regular basis, make sure you have this on hand. And again, I've got links to all the stuff you're going to need beneath this video. Just send those links to your account. And again, it helped me out a lot, and I hope it helps you too. Best of luck.